So now we're going to talk about the downtrend reversal. The downtrend reversal is the opposite of the uptrend reversal. So very similar. So we're going to have a market structure zone entry signal, just like we had for all the others. But this is where market structure is downtrending, creating lower lows, lower highs, and then price breaks the structure. What it means by breaks the structure is breaks one of the highs or the lows. Okay. So price breaks the structure. Some people say it breaks the trend. So price breaks the structure, or some people say it breaks the trend line. Some people use trend lines. The reason I use structure is because sometimes the trend line won't be exact, but the structure normally is right on point. So the lower high here, once that's broken and it comes back here, what we'll be looking for is some sort of, it can be here that we'll enter, or maybe here, but it's somewhere in this zone. But we'll be looking for a short-term break of structure, like a 15-minute, 5-minute break of structure, but 15-minute candle, if it's on the indices, NASA 100, 15-minute candle, 5-minute break of structure, GU, GJ, or the pairs, we're looking for 1 hour, 30-minute, okay? 1 hour, 30-minute candle. So let's get right into it. Okay, so we are looking at US 30. We're talking about the downtrend reversal, and this is a buy. So if we look at US 30 here on the daily, again, we are looking at looking to gauge what's happening with the price. So price was downtrending here. Okay, so if we look at price here, price had a low, then a low that was rejecting from this area here. Okay. So now what happens here is price comes down to this area to create a potential lower low, but there is aggressive buyers here. Price pushed all the way down here, aggressively selling. And then the buyers, the big buyers, they felt that it was a good opportunity to rally. They rallied the market back up that day. Then big aggressive selling happened, then big buying. So this is a double top. This is a double bottom. If you look on the line chart, double bottom. So when that happens, when it comes to structure, this would be considered the lower low here. And then price breaks this zone. So what we would be looking at is taking a buy position from this zone here to potentially continue higher. Okay. So once that break happens, we're looking for a retest. And if we go to the 4-hour zone, once that break happens, and if you look at it from the 4-hour, you can see that the price is continuously going higher. So if you remember one of the examples that I gave in the market structure video is that some seller may have orders here, okay? So they could potentially have, let's say they have a total of 1,000 orders. I'm just gonna use 1,000 as an example. So when the buyers come up here, they take, let's say they buy, let's say they take 500, or they took 250. So now we have that seller has 750 left at that zone. Then price goes down, comes back up here. Now that seller has 250, okay, left, 250 contracts left, right? So now when they go, they consume those orders. Some aggressive sellers come because they see that the market is halted here. So aggressive selling happens. And what's happening here, this is an accumulation. And those buyers, they're waiting for small resistance. They're looking for a time when the resistance will be small. They're looking for the path of least resistance. So before they buy with large amounts of demands, they're going to do tests to see how weak supply is. So once they come up here for the next time, these orders have been consumed. Okay, whatever sell supply was there has been consumed. They've been accumulating contracts here. Now they're rallying the market up. So here we have rally, base, rally. Okay, so not only do we have a reversal of the sell, we have rally, base, rally. So here we are going to be looking for price to come to the demand zone, and then we're going to be looking for a buy. So we come here, price comes up, we look for price to come to the demand zone. And if we look at the 15-minute time frame, the 15-minute has a pin bar here, okay? And if we entered here with the candle, 15-minute, we remember what I said, that when the US 30 is rallying, when it comes back to demand, normally we'll only have candles. Okay, that will be our reliable entry, the candles. So here we have a good 1 to 4 position. So if we enter here, we had 50% of this wick, so we could have got a better entry than this one. If we would have got 50% of that wick, that's a 1 to 6. Okay, but let's say we enter one position here and we entered another position. Well, I'm going to talk about this later at 50% of the wick. Okay, so we got very great, excellent R&R. So I'm going to speed this up. Boom. So price hits our target, hits that daily zone, and then goes back down. So we're there. We had a great trade. Okay. So that's the reversal. We'll look at this trade in more detail in another video. Let's see what else happens and how it plays out. But that's the reversal right there. Excellent trade. Came back to demand and it hit our target and we were out. Please leave your comments and your questions in the comment section. See you in the next video.